Trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg.
Bringing you up-to-the-minute technology news whenever and wherever it happens. I'm Annabelle Drawlers in Taipei, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
This is the Asia Trade. I'm Sharian in Tokyo.
I'm Heidi Stroud-Watts in Sydney. The top stories this hour. Asian stocks are set to follow Wall Street higher as China pledges to support growth and the US economy shows resilience. The Fed's preferred inflation gauge is out later for fresh hints on the rate outlook. Beijing top leadership is ramping up efforts to revive growth with promises on fiscal spending and stopping the housing slump. Plus, Japan's ruling party set to choose its new leader. We'll take a look at the economic and geopolitical challenges facing the next prime minister.
It's really a big day here in Japan, isn't it, Heidi? Because we get the president of the LDP today, and that will mean that we're getting a new prime minister. And what that really means when it comes to tackling the series of challenges that Japan faces, whether it's really that economic revival that we're seeing here in Japan, or else also geopolitical tensions rising. Of course, we have seen those China tensions continuing to increase. We have seen Beijing now fire its first intercontinental ballistic missile into the Pacific in 44 years. Japan also sailing its vessel through the sensitive Taiwan Strait.
Yeah, you're talking about, of course, these ongoing, both historic but also fresh tensions with Beijing, right? And in fact, China really has some problems of its own that it does really look like it's doubling down to try and deal with. We've waited, economists, investors alike, for, more decisive sort of kitchen sink-sized action when it comes to stimulus, both fiscal and monetary. And it does seem like the pledges are starting to head that way, right? After the slew of measures that were already to certain parts of society, we now also heard in this Politburo huddle really the need to be able to be more forceful when it comes to meeting this GDP target, the sort of kind of underlying dedication and the ramped up efforts to revive growth, pledges to support fiscal spending, stabilizing the beleaguered property sector. That really gives the new momentum to stimulus measures and I guess the seriousness and the priority being given by Xi Jinping's huddle of that 24-man Politburo to really support that annual economic goal. There had been obviously a lot of debate as to whether that 5% target was something that Beijing was willing to sacrifice in this slowdown.
And all of that optimism about the Chinese markets leading to the Chinese stock markets also getting a boost, but also those Chinese stocks listed in the U.S. with the Golden Dragon Index seeing its best day since 2022. Of course, we had a lot of data overnight, including economic data from the U.S. being revised higher for economic growth since the pandemic actually being in better shape than expected. We also had the tech sector moving a lot because we had that support coming from Micron's earnings, but at the same time, reports of that DOJ probe into supermicrocomputer hitting the sector as well. Right now, futures not doing much, but of course, we're watching also the trajectory of yields slightly higher throughout the week. Of course, we have seen those better economic numbers really feigning confidence that the Fed will be able to cut rates as fast as markets had expected. But take a look at what's happening across Asia because we had a little bit of support for the dollar. We have seen the Japanese yen really under pressure for the past few days. We're talking about that 145 level against the US dollar being hit in the overnight session. We're now seeing it at around that 145 level still. So it's really to do with how the BOJ is also expected to not rush into hiking those rates that we've seen. Of course, we do have also a little bit more volatility when it comes to the yen, given the LDP presidential elections today. We are going to get those results in the afternoon session today, so do watch out for that. Nikkei futures up 0.4%. We're already at levels that we haven't seen in about 2 weeks. So we are seeing that boost to equity markets across Asia. The Korean market also at the highest in about 2 weeks, Heidi.
And of course, China's top leaders, Sherry, really ramping up these efforts and certainly the rhetoric to revive growth with pledges to support fiscal spending, to stabilize the property sector. It does really inject some new momentum when it comes to really the slew of stimulus measures that have already been announced. For more, let's bring out China correspondent Min Min Lo, who joins us in Hong Kong. And, you know, the market reaction is pretty clear. We've seen Chinese stocks headed for what their best performance, best week in about a decade or more. Not so hard to do, I guess, when you take a look at just how depressed the levels already were for valuations. I guess the question is whether this can last.
Yeah, what a week it has been, right? The CSI 300, as you said, set for the biggest weekly gain in over a decade, and it's finally erased the year-to-date losses so far. The Hang Seng China Index as well jumped 4.8% yesterday. That's the highest level that we have seen since February of 2023. And if you look at the setup for the China Open later today, the Golden Dragon Index was up some 11% overnight. It looks like we are poised for this 8th straight session of gains on the CSI 300. And it's really because of this back-to-back announcement of the stimulus, right? On Tuesday, you had the monetary policy, the measures for the capital markets. Wednesday, it was the cash handout to the extreme poor, the measures to shore up employment. And Thursday, it was the Politburo meeting, the fiscal package, the property measures. And so the big gainers would be the property developers. That index was up 16% yesterday. The likes of Shimao jumping 40% yesterday as well. And consumer staples, another big gainer on the back of the news that the government is giving cash handouts to the extreme poor. That was up some 9%, I believe, yesterday. Even though our Bloomberg economist is saying that cash handout isn't going to move the needle very much, given it's only benefiting a very tiny sliver of the population. But still, it's this coordinated announcement of the policies all at the same time for every corner of the economy that's bringing the animal spirits back to the China markets.
And why did we focus so much on the Politburo announcement? Of course, we just heard more pledges, so all combined. Just walk us through the stimulus measures that we're talking about here.
Yeah, there was a very short readout from the Politburo meeting, but a very punchy one. And what really stood out to me is the language, especially around the property sector, because it talked about how it seems like the KPI now for the government is to stop the decline. Now, that's a phrase that the government hasn't really used before. And it's clear that the mandate has now shifted away from deflating the property sector to really stopping that decline in home prices, the decline in home sales, the downturn that's been going on for 4 years now. Not a lot of mention of new measures because they made a nod to some of the existing measures like cutting mortgage rates, reducing home buying curbs, reducing oversupply. But could that mean that there might be more measures? Is the government going to step in as the buyer of last resort? Will they widen the use of local government bonds to buy up those unsold homes? That's something that's key to watch. The fiscal policy side, the government said it will step up spending as necessary, a departure from the past because previous Politburo readouts had said something like a proactive fiscal policy. That language a little bit vague, but Reuters is reporting that the Ministry of Finance is planning to issue some 2 trillion yuan in special sovereign bonds, half of that to boost consumption, half of that to tackle local government debt. So if that's true, that's a big off-budget boost to fiscal spending. And then around monetary policy, the readout says forceful implementation of interest rate cuts. Again, very different from language in the past where they have said a prudent monetary policy. So it's that shift in the tone that's significantly different from the past that shows the urgency that the government is pouring its entire weight behind the economy to hit that growth target this year.
Bloomberg's China correspondent Min Min Lo there. Let's bring our first guest for the Asia Trade. Jay Hatfield is the CEO at Infrastructure Capital Advisors. So, Jay, certainly in the rhetoric, perhaps the level of desperation when it comes to the language, we're hearing what could be a game changer, right, from Beijing. Would you be waiting to see the execution before getting too excited in terms of an economics turnaround and certainly a turnaround for Chinese assets?
Thanks, Heidi. It's great to be on. Well, we've actually been more optimistic, and when we were on your program a while ago, even said this about the Chinese economy than almost all global investors, particularly Americans, for two reasons. The first is that China does save 45% of their GDP, and they are able to keep their industrial economy going fairly strongly because of investment. Obviously, a huge problem in the property sector and with the consumer. But we had, last time around, we said that the only good thing, or one of the good things about a centrally planned economy is that once the government decides to deal with it, which it seems like just happened, then they have all the tools. And then the other point I make, we follow the global monetary base. We publicize that on our website. And we think that monetary policy is way more powerful than most investors do. And if you look at the situation with the PBOC, they have a lot of dry powder. They've only grown the money supply at 1.5%. Normal growth would be more like 5%. And inflation is relatively tame. So they have a lot of dry powder. And then the other point that's also relevant, and David Tepper mentioned it on another channel this morning, when he was justifying being really long Chinese stocks, that the fact the Fed moved aggressively gives a lot of headroom to both China and Japan to moderate, or in the case of China, cut monetary or have loose monetary policy. So I wouldn't ignore the fact the Fed has given headroom to these other.
What's a risk that, effective these measures might be, and the intention is clearly much stronger, if this is sort of a kind of a cyclical, forceful lift to growth? That's great, obviously, in the short to medium term. Would you still be worried about the more deeply rooted structural problems that do exist with the Chinese economy?
Well, I think that would be a huge problem if China didn't save 45% of their GDP. So they actually invest that fairly poorly, at least compared to the United States. So in other words, the return on invested capital is pretty low, and that reflects the structural issues that you're describing. But even a low return on invested capital with that much being saved still produces about a normal growth rate of about 5%. So I think that in the case of China, not Japan, but in the case of China, because of that gigantic, really the highest in the world savings rate, that offsets the fact that some inefficiencies relative to the communist system.
Jay, how closely are you watching the LDP election here in Japan for a sense of direction of where the yen goes from here?
Well, obviously it's important, but we do think that monetary policy is more important. And Japan is a little bit like China in that they do have the headroom from the Fed. They haven't increased the money supply barely at all. So all the discussion of yield curve control, we think, is overblown because normally Japanese rates are really low anyway. So we think that the central bank has flexibility in BOJ to keep rates where they are. They're not really that stimulative. There's only 60 basis point difference between the policy rate, short-term rate, and the 10-year. So we think it's sort of a misnomer that there's a super loose policy going on. And you mentioned the weak yen, although it's been up and then down. The fact that the Fed is cutting has taken some pressure off of the yen.
What does that mean for stock markets here? Because we have seen, of course, exporters benefit from a weak yen, but recently with the strength of the yen now back, those domestic focused stocks are doing very well.
Yes, well, we do think that the global rally will continue. Japan was really leading it. We think they'll continue to participate. sort of the more risk you take, the better. So we do think that global markets, emerging markets, which would be China and even Japan, should participate. So we are bullish about not just these factors we're talking about in China and Japan, but the whole world is cutting interest rates, except Japan, but they're hopefully not going to raise them. But not just the US. Eurozone actually has a bigger monetary base than we do. They're ahead of us. Canada's ahead of us. So that's just a great time to put on risk. It's not just that rates go lower. That means that you have to inject capital into the banking system. The monetary base globally grows, and that tends to inflate both the stock and bond markets. So we're bullish globally. There's a lot of cheap stocks in the US as well, but there's also a lot of undervalued companies in the emerging markets and even Japan.
Jay Hatfield, good to have you with us, CEO at Infrastructure Capital Advisors. And coming up on the Asia Trade, we'll look at how Japan's leadership vote today could affect the LDP's performance in the next general election. Plus, Capital.com joins us to discuss how looser financial conditions are supporting highly cyclical Asian markets. Much more ahead. This is Bloomberg.
Eurozone actually has a bigger monetary base than we do. They're ahead of us. Canada's ahead of us.
Whenever and wherever it happens. I'm Annabelle Drawlers in Taipei, and this is Bloomberg.
DOJ or other authorities
Could face bigger challenges next.
Fed was going to keep rates while come. This is a three
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Top names in business are on Bloomberg.
We all feel very strongly that we need to become profitable again, and we need to remember that we have these tremendous strengths that we need to drive more value out of. We're focused on delivering the organic plan. Going through a transaction can take its toll on an organization. It also creates a level of distraction, and so we're very much focused on executing our Jet Forward plan and bringing JetBlue back to what it was when we were founded.
Nobody covers business like Bloomberg. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
On October 1st, with the election weeks away, the VP candidates are set to face off. When we fight,
you guys are going to get me all fired up again.
Trust Bloomberg for news and analysis.
So is it style or substance or maybe both? We'll be hearing from Tim Walz and J.D. Vance in prime time.
Yeah, and the question is whether the vice presidential nominees are actually able to move the needle.
Tune in for the CBS News Vice Presidential Debate simulcast with special coverage starting at 8 p.m. Eastern. Context changes everything.
Big day here in Japan. The ruling party votes for a new leader later today, with the winner set to replace the outgoing Fumio Kishida as prime minister. For more, Japan economy and government editor Paul Jackson joins us now. And Paul, a busy day ahead for you as well. Tell us a little bit about what to expect today and also the next few days, the next week.
Well, we're expecting the vote this afternoon.
Intersections of Hollywood, Silicon Valley, and beyond.
Top names in business are on.
Come out. That should be inconclusive. Remember, we've got a record field of 9 candidates, so there's scope for some surprises. That first vote includes regional LDP members plus the MPs. So we're expecting that vote at that point then to lead to a runoff between the top 2 candidates. And in that second round of voting, the MPs have far more say in the decision by a factor of about 8-1. And we get the result about an hour later. Of course, there could be some changes to the schedule if the 2 in the runoff give speeches or something before that final runoff. The details could change a little bit. Following up from that, the become leader of LDP give a press conference this evening, so we get a little bit more information on what they're planning to do at the start of their tenure. And then as we get into next week, Parliament opens and we should have the leader of the LDP installed as Prime Minister probably on Tuesday with a cabinet to go with.
And the big question mark is who that leader is going to be at this point, right?
That's right. So we've got, among the 9 candidates, we've got 3 front runners. We've got former Defence Minister Shigeru Ishiba, who's long been one of the most popular politicians out and about in Japan, in the regions, but perhaps not so popular amongst MPs here in Tokyo. We also have Sanae Takeichi, who's well known as a hawk on political matters, and she's very much in favour of the BOJ, sticking with stimulus, going slower on rate hikes and stuff like that. And then we've got third frontrunner is Shinjiro Koizumi, and he's son of a former prime minister. He's making himself out to be a reformist, like his prime minister. He would be Japan's youngest ever premier if he wins. And he's perhaps the face that could best renovate the image of the ruling party after it's been mired in scandals, funding scandals, which are part of the reason why Kishida stepped down.
So many issues to deal with and challenges. Of course, we have talked extensively about the economy, but now we continue to see these tensions with China brew as well.
That's right. I mean, first of all, the economic divergence in among the candidates is worth flagging. I think if it's Ishiba who wins, we continue to edge away from Abenomics and stimulus. If it's Koizumi, he wants to accelerate reform, and if it's Takaichi, well, she kind of wants to put the brakes on things and stick with stimulus, kind of go back, if you like, towards Abenomics. So it's a kind of inch forward, accelerate, or hit the brakes, if you like. Now, on foreign policy, I'd say one of the key factors to watch is, among others, is visits to Yasukuni, and both Sanae Takeichi and Shinjiro Koizumi visited that shrine, which causes a lot of angst, obviously, amongst Japan's Asian neighbours. So whether they would continue to make those visits or not is a key point.
Paul Jackson, our Japan economy and government editor, with a busy day ahead as we get those results later today in the afternoon. And stick around for more analysis on Japan's leadership race. We'll be joined by the Council on Foreign Relations shortly. Heidi.
Yeah, a lot going on when it comes to geopolitics, Sherry, because we're continuing to watch the situation in the Middle East, where Israeli Prime Minister Benjamin Netanyahu has rejected a push for a ceasefire with Hezbollah, saying his military will indefinitely maintain its bombardment of the militant group targets in Lebanon. Let's bring Bloomberg's Michael Heath for the latest. Perhaps unsurprising that this was rejected. What would it take for these goals to be achieved for Israel?
Well, I mean, yeah, they sort of haven't set them out, but the sense is that Hezbollah needs to, basically pledge that it's got to stop firing. I mean, it's been steadily bombarding northern Israel since the outbreak of the war in Gaza, and Israel's had to remove evacuate a lot of people from that northern area, and it wants to put them back in there. So Hezbollah needs to stop bombing, and it sort of needs to pull back from Israel's border. Now,
which they won't do until the
war in Gaza stops.
Yeah,
exactly.
Gaza stops,
so, it's sort of chicken and egg situation there. But Israel's sort of point of view view now is that Hezbollah is not going to agree to anything unless it's actually hit militarily. I mean, this fight has been sort of brewing for ever since the end of the last war in 2006, and the surprise was probably that Gaza actually became the centre point of the conflict. So now that Israel started, it's going to keep hitting. I mean, we saw they assassinated another senior commander yesterday, so they're just not going to stop this, and I don't think it's much of a surprise that, having done this for 4 or 5 days, that Netanyahu said we're not going to have a ceasefire, particularly for 3 weeks, because Hezbollah would just use that to rearm. I mean, they've been around a long time. Everyone sort of knows their modus operandi there. So perhaps a shorter ceasefire could happen, just to protect the civilians and try and allow people to move out of these areas, because obviously, I mean, Hezbollah in a sense keeps Lebanon as a state hostage. I mean, it's so powerful within there, and because it is among civilians so much, I mean, the reality is you're going to get a lot of civilian deaths. We've already seen 600 people killed since Monday. I mean, it's very, very severe death toll, and it's only going to sort of worsen as we go on there. And it's Gaza. You've got a built-up area. You've got civilians there. You've got fighters in among them, and you're trying to target them. And it's always going to happen. There'll be fallout, unfortunately.
Bloomberg's Michael Heath there with the latest. More ahead on the Asia trade. This is Bloomberg.
If I were at the Fed, I would be thinking about the tools that we have in the toolkit differently. I would be utilizing quantitative tightening, and to a great extent, they have. Post-COVID, $12 trillion came into the global economy from central banks everywhere. And right now, we've seen about $5 trillion has been hoovered back out. That still leaves $7 trillion sloshing around in the system globally relative to where we were before COVID. Now, adjusting that for larger GDP and GDP growth globally, probably we need to see about $3 trillion more come out before we get to an equilibrium of where we were before COVID. I don't think the Fed really appreciates the quantitative tightening tool as much as I do, and I think as much as the markets do.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Latest on the corporate front, and the CEO of Hong Kong-based New World Development has resigned after its first annual loss in 2 decades. Adrian Cheung is the grandson of the company's founder and took over as CEO in 2020. His resignation adds to questions over succession for one of Asia's wealthiest clans. COO Ma Xiu-chung will take over as New World's CEO. Wall Street heavyweight Citi and Apollo are teaming up to work together on $25 billion worth of deals in the private credit market over the next 5 years. Mubadala and Apollo's insurance unit, Athene, will also participate. Bloomberg has learned the exclusive partnership will arrange financing for corporate and private equity clients. Supermicro plunged the most in a month on a report that the U.S. Justice Department is looking into an ex-employee's claim of accounting violations. Sources say a prosecutor has reached out to people who may have relevant information. An ex-employee claimed in federal court that Supermicro sought to...
We were before COVID. Now, adjusting that for larger GDP and GDP growth.
More ahead on the Asia trade, this is Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Bloomberg has the Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
We have breaking news out of Tokyo right now. We are getting the CPI year-on-year for the city coming in at growth of 2.2% for the month of September. This is in line with expectations, a slight deceleration from the previous month, but take out fresh food and you get core CPI year-on-year growth of 2% for the month of September. Of course, we've watched the Tokyo CPI numbers because they're an indicator of nationwide prices, and we know that core inflation here in Japan nationwide has stayed above that 2% BOJ target for more than 2 years. We'll continue to watch the inflation momentum that we're getting in Japan at the moment with that positive wage price cycle resulting from those spring Shunto pay negotiations. And of course, it's also election day here in Japan today. Ruling Liberal Democratic Party voting for a new leader in a few hours, with the winner set to become the nation's next prime minister. It's been one of the most open races in the Conservative Party's history, with a record 9 candidates in the running. It's a crowded field of contenders vying for a job that comes with unprecedented challenges. The large field of candidates in Japan's ruling party election makes it likely that no one will secure a majority, which would trigger another round between the top 2 contenders. Among those on watch for a potential runoff, Shinjiro Koizumi, the son of a former prime minister who at 43 could become Japan's youngest prime minister. Shigeru Ishiba, a former defense minister who's running for the 5th time, and Sanae Takaichi, a hardline conservative who would be Japan's first female prime minister if she wins her party's backing. She's also one of the most outspoken on the Bank of Japan's policy path as an advocate of monetary easing.
She has basically said that the BOJ is making a mistake by moving as quickly as it is to raise interest rates. And frankly, I think that sets the Takaichi government up for possible conflict because she really wants easy money to continue.
Japan's next leader will need to grapple with geopolitical challenges as well, as the country gets pulled deeper into tensions between the U.S. and China. Tokyo faces threats of retaliation from Beijing amid pressure from Washington to tighten restrictions on sales of advanced chip technology. Adding to the uncertainties, the tight U.S. presidential race, though both candidates for the White House have opposed Nippon Steel's $14 billion takeover bid for U.S. Steel.
U.S. Steel should remain American-owned and American-operated.
U.S. Steel is now being sold to Japan. I will stop it. We got to do fast. We got to work fast, but we're not going to let it happen.
Some common ground for most of the candidates is the revival of Japan's nuclear power industry. 13 years after the Fukushima disaster, this is seen as a way to improve energy independence and reduce carbon emissions. Whoever wins Friday's vote is expected to call a national election soon, seeking to shore up support from a Japanese public weary of scandal and demanding sustainable economic growth. Let's bring in our next guest, who says the LDP vote is all about the next general election, with the ruling party lagging in opinion polls. With us now is Sheila Smith, Senior Fellow at the Council on Foreign Relations. Sheila, great to have you with us. Of course, we're coming from this funding scandal that has hit the LDP. We're also not having, having most factions actually dissolved because of all of this. Very low visibility. What are your expectations for today?
So I think your setup piece was terrific. I think this is the most exciting or unpredictable, depending on how you look at it, race that I've seen for the LDP leadership in most of my career. I think we're going to have three people at the top of the list, as you noted, Mr. Ishiba, Ms. Takaichi, and Koizumi, the junior. It looks today, if you are reading the Japanese press, like it's going to end up being an Ishiba versus Takaichi battle. And I think that's going to pose some pressures on the LDP minister, the Diet members themselves, to figure out really what kind of leader they want to go into the general election with. So I think there's a certain degree of anticipation here that this is not going to be an easy choice for Japan's sitting parliamentarians.
What would be the implications for the Japanese economy? I mean, it's interesting because it's still within the ruling Liberal Democratic Party. We know that we're not expecting huge changes, but these candidates do have slightly differing views when it comes to monetary policy and fiscal policy as well.
That's right. And the more sort of technocratic economists are not in the running. So what you've got in the three leaders are people who really don't have a full-blown economic plan. Instead, you've got people who have other priorities. Takaichi, as you noted, and I think Tobias Harris kindly pointed out for us. She wants monetary easing, but she also wants to avoid having to impose a defense tax on the Japanese taxpayer. So there are political reasons behind some of her thoughts, as well as Koizumi and Ishiba. I think the common theme, though, and I think among most of the candidates this round, has been the rural economy, the idea of rural revitalization, which means more government spending to help the hollowed out towns and cities of rural Japan, help get them through the demographic challenge, but also the lack of economic options for them.
And one thing that contenders seem to agree on is more defense spending at this point. I mean, we have seen these geopolitical tensions with China brewing, Japan now sailing its vessel on the sensitive Taiwan Strait for the first time in decades as well. How is this relationship really going to affect also Japan's relationship with Washington, as well as we see these tech exports against China?
So the defense area is one area where you saw all candidates, but the three leading contenders specifically, outline a little bit of a more robust Japanese defense spending, robust Japanese defenses kind of posture. I think the most forward-leaning on that is going to be Takaichi and Ishiba. The latter is a former defense minister, and Takaichi herself has been very strong about making sure Japan's self-defense forces are prepared. In the midst of this election campaign, and your opening revealed this, of course, there are rising tensions between Japan and China over the stabbing of a 10-year-old boy and his subsequent death in China. But there's also been a series of intrusions, Chinese intrusions into Japanese airspace and territorial waters, a Japanese destroyer intruding into Chinese waters, and then, as you noted, a freedom of navigation operation by a Japanese destroyer just yesterday through the Taiwan Strait. So there's a quiet tit-for-tat upping of the tensions, the military tensions between Japan and China, in addition to this very sensitive issue of the child that was killed in China. So I think the next prime minister is going to have to make some tough choices. And what you heard in the debates over the campaign was people really saying that they would stand up and defend Japanese interests and call out China on its behavior. So I expect that the next prime minister is going to face some pretty tricky territory when it comes to managing the Japan-China relationship.
Not least of which is also managing the relationship with the White House, depending on the outcome post-November. But I do wonder, is there quite a spectrum of views when it comes to how Japan will align itself with Washington, depending on what the outcome is in this election? Because we know the former foreign minister, the economic security minister, are just a couple of the candidates that perhaps are more willing to push back against the US.
So Ishiba is the former defense minister, as we've already noted. He called for revising the status of forces agreement that governs the presence of U.S. military forces in Japan. Very politically difficult, but also something that Washington wouldn't welcome. He also called for some fairly serious thinking about Japan entering into a collective security arrangement with other powers, United States included, but in the Asia Pacific, again, pushing Japan into a position where its constitution would probably have to be revised. So that's Ishiba. The Takaichi wants American missiles on Japanese soil. She wants far more integration between U.S. and Japanese forces. She wants to make sure that extended deterrence works. So I think she's going to be fairly forward-leaning on trying to get the United States to demonstrate how it's going to deter aggression and defend Japan alongside the Japanese military. She has a tricky position on Yasukuni Shrine. She wants prime ministerial visits to Yasukuni, which of course would get in the way of a priority of the current Biden administration here in Washington, which is to strengthen Japan, Korea, U.S. trilateral relations. That Yasukuni Shrine visits by the prime minister to formalize that, of course, would create difficulty for Japan with its neighbor in South Korea and obviously also with its neighbor in China.
Yeah, we've seen those difficulties during the Abe administration, during the Junichiro Koizumi administration as well. Sheila Smith, good to have you with us, Senior Fellow at the Council on Foreign Relations. Now, let's get more on the market impact when it comes to the LDP elections here in Japan. We have our equities reporter, Aya Wagatsuma, joining us. So it seems that right now what we continue to watch is perhaps the candidate's stance on the BOJ policy as well, what that would do to the yen, right? What are some of the big implications here of the election?
So thank you so much. And as for a lot of market participants are looking at the monetary policy views that the candidates are having. So Ishiba and Koizumi are quite hawkish on the monetary policy views, which would mean that the interest rates could potentially continue to go up, the yen could strengthen, and with that, exporters would also fall in Japan. So Japan stocks, which are mostly made up of exporting companies, will fall as well. And as for Takaichi, she is dovish on monetary policy views. So that would mean the yen would actually go up, that the yen would weaken, and Japanese stocks would eventually go up.
It's really interesting because we know that the BOJ is independent, but it's always a political pressure in any country that has big implications for the markets, right?
Japanese military. She has a tricky position on Yasukuni Shrine. She wants prime ministerial.
Well, everybody wants to spend more on defense as well.
Yes, so that is exactly correct. Most of the candidates are really keen on raising defense spending. And already with the Kishida administration, there has been a record budget for the fiscal year starting in April, meaning that a lot of people are looking at the defense sector, especially companies like Mitsubishi Heavy or IHI. And other sectors that a lot of investors are looking at are also energy companies as well. All of the participants are actually very keen on nuclear power plant restarts. So that would mean companies.
Our equities reporter, Aya Wagatsuma, joining us. So it seems that right now what we continue to watch is
of the investors.
Aya Wagatsuma here, our Japan equities reporter, with a preview of what to expect in the markets as, of course, we head towards the LDP presidential election this afternoon, Heidi.
Also heading towards, of course, in November, the U.S. election, Sherry. We have the latest Bloomberg News and Morning Consult poll suggesting that the Democratic presidential nominee, Kamala Harris, is widening her gap over Donald Trump in 7 key swing states. Let's bring our senior editor, Wendy Benjaminson, who joins us out of Washington. The question, of course, was also, whether she was going to be able to keep up the momentum after the switch in the candidacy, after the convention boost as well. And it does seem like she's managing to convince some people.
Yes, she is. Her lead is still very tight. I mean, this is a deadlocked race. So her lead in each of the individual 7 swing states that Bloomberg News and Morning Consult polled last week, her lead is within the margin of error. But if you look at all the states combined, her lead is just outside the margin of error at 3 points. That is a tiny little lead. And any any errors on her part, any problems with the campaign, any good things that Trump campaigns on, Donald Trump will certainly change that. So it's anyone's guess at this point who will win. Where she was doing particularly well is in closing the gap with voters on who they trust to manage the U.S. economy. Joe Biden was consistently, in our poll that started last October, was consistently behind Trump on that. And Trump is still ahead. But as you see there, Kamala Harris is narrowing that gap to a tiny margin, where she is just a few points behind him on trusting the economy. People find her economic policies more popular. They find, and they're more inclined to trust her on who will best handle the middle class.
So we're getting more clarity on her policies, because initially there was a lot of concern that voters did not know her, and she was a bit reluctant when it came to being interviewed as well.
Yes, that's true. She is warming up to that. She is doing more interviews with both local and national outlets. And she is starting to lay out policy proposals. There isn't a lot of deep detail in them, just like there isn't a lot of deep detail in Donald Trump's policy proposals, but they're out there. Raise taxes on those who make more than $400,000 a year. Expand the child tax credit. Give assistance to first-time home buyers. Those are all of her economic policies that were very popular with our poll respondents. His are also popular in terms of not taxing taxing Social Security benefits, but his 10% tariff on imported goods is very unpopular.
We're also watching for sort of more debates, right? We know that Harris's team has said they've accepted that October 23rd debate on CNN. We know that the former President Trump doesn't want any more debates at this point. But in terms of looking ahead to the VP debate, what can we expect? And I suppose how high are the stakes here for how well it goes for either side?
Well, honey, as you say, the stakes, this is going to be probably the last debate in this presidential cycle. So the stakes are extremely high for Governor Tim Walz of Minnesota and Ohio Senator J.D. Vance, the two running mates, Tim Walz being the Democrat, of course, and J.D. Vance being the Republican. So the stakes are high as surrogates for the top of the ticket, who can talk about the values of the campaign. And of course, we do expect Tim Walz to hit J.D. Vance on his comments about women who don't have children, his comments about the Haitian immigrants in Ohio. And I think J.D. Vance will be looking at Tim Walz about the policies that he considers far too liberal for Americans, as well as some statements that Walz has made in the past, before he was Kamala Harris's running mate, that were not as accurate as they could have been.
Bloomberg senior editor Wendy Benjaminson there in Washington ahead of that VP debate next week. We do have more ahead on the Asia trade. This is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Tokyo Electron CEO Toshiki Kawai says the rush into AI chips still has more room to run as a wealth of developing industries will drive more demand in the coming years. Our exclusive conversation also included the chip-making equipment maker's outlook in its key market of China, as well as a new partnership with Tata Electronics in India.
I think we'll continue to see growth in the AI segment. Growth in the AI server segment is forecast at an annual rate of 30% in the years 2023 to 2028. Expect a very strong growth. There's no doubt about the growth potential of artificial intelligence, but I think the market is focusing too much on that particular segment. I think the market has just crossed the threshold of the second phase of AI. Our projection is that overall chip demand will double in the next 5 years to $1 trillion in 2030, boosted by artificial intelligence, as well as augmented reality, virtual reality, and autonomous driving.
A big chunk of your business also comes from China. More than 40% of your revenue in the last fiscal year came from China. Do you expect this level of demand to continue, or has a lot of it been front-loaded by Chinese companies expecting more restrictions coming from the US and its allies?
A period of inventory correction last year suppressed investment into the high-end memory segment. On the other hand, investment into China grew because of initiatives over the last few years to increase capacity there. As a result, China sales grew to 40% of overall revenue. Now that the initial investment phase is over, China sales will likely fall below 40% in this second half and eventually settle down to 25 to 30%.